We are optimistic on the property sector bonds, and I will break down today's message into three parts: the demand side factors, the supply side factors, and the issuer factors. Hello, welcome to another RHB Treasury podcast. I'm Chris Tan, Fixed Income Strategist at RHB Banking Group. There are a lot of interest in property sector bonds because I receive a lot of queries on that topic, and because of that, we have put together a report just for you. So let's get into it. The first part, the demand side factors. Our indicators show very positive signals. Number one, the property cycle was resuscitated in 2022 by historic economic rebound. The low interest rate and historically strong economic growth of 8.7%, which is a growth level not seen since the boom years of the 1990s. Second, favorable demographic profile. Malaysia's demographic profile remains a fundamental driver of first-time home ownership. So what does that mean? The first chart here that we see shows our population pyramid. As you can see, a bulk of the population is in the middle there, are the percentage of people at the home buying age of between 25 to 40 years old. And the number of people in this age group are also expected to remain constant at around 11 million people until 2040. Using the number of marriages as an indicator for household formation and subsequently home demand, the numbers indicate roughly 200,000 couples, including Muslim and non-Muslims, get married every year. So, newer household means more need for houses. And apart from that, the number of households continue to grow and stands at 8.36 million at the end of 2022. So, if you have people wanting to buy houses, we also need income to finance it. And this goes to our third point, jobs and income. The economy has done well in recovering after the pandemic. Our unemployment levels are almost at pre-pandemic levels. And apart from job, wages has also continued to grow. And this gives potential home buyers increased ability to purchase home and service its debt. All of the key factors point to healthy demand for residential properties going forward in the near to medium term. But there are also three other potential catalysts which will potentially boost home purchases. Number one, the return of Chinese tourists, which will boost local income. The surprisingly strong GDP growth last year was driven by consumer consumption growth. This actually took place even before China lifted its lockdown and allowed the people to travel freely. As such, a revival of arrivals from our neighbor up north will help to drive consumption going forward. Number two, soaring home prices in Singapore. Home prices in Singapore have recorded new highs almost every month since May of 2020. And this could make a case for home ownership in Johor and revive demand and prices for the state of Johor. In addition, the upcoming rail connecting Singapore to Johor will improve connectivity between the two states. And number three, the revision of Malaysia My Second Home, also known as MM2H program. During the pandemic, the government decided to limit the people entering the country by placing very high requirements to be a resident of this country, resulting in a 90% drop in applicants of the MM2H program. Now, recently, the government has announced that the MM2H program is under review to reduce the requirement and to allow more foreigners to live here, which we think will contribute to the pool of home buyers in Malaysia. So we have the demand side factors, so we move on to the second part, which is the supply side factors. So the first key point is the residential property overhang situation has improved last year as the unsold housing units declined in 2022. As you can see, overhang units dropped sharply from its historical high in 2021. The National Property Information Centre, NAPIC, defines overhang as housing units that are completed and unsold for more than 9 months. Lower units for sale means a supply-demand dynamic which favor sellers. As a result of the supply side reduction, prices of home grew in 2022. The Malaysian House Price Index shows home prices picking up in 2022. And in tandem with the rebound in home prices, the Home Price Index, property sales also saw a strong resurgence as sales jumped 29% in 2022 to 389 units compared to 300,000 units in 2021. In addition to the overhang problem that we always hear in the news, we actually think the current residential property overhang is not a systemic issue when viewed from an aggregate context, because the increase in unsold units we think are consistent with the growth of the total residential units in the country. This chart shows that the country's housing total stocks, meaning the total houses in Malaysia, grew significantly from 4.436 units at 2010 to 6,008,000 units at 2022, which is approximately a 50% growth over that period. And residential property overhang stood at 27,000 units, or 0.46% as of 2022, which is not a far level from a 0.5% that we have seen in 2010. Following the strong residential performance in 2022, new planned housing supply and construction starts, we saw unprecedented increase. This signals extremely bullish sentiment by the developers on future sales. But the downside is that we can expect overhang units to increase as a result of potential overbuilding. Moving on to the second point, workers' shortages has reportedly improved. The Foreign Worker Employment Relaxation Plan, introduced in January, has recently approved close to 1 million foreign workers quota applications to ease labour shortage from various key sectors. And the plan was stopped in March until further notice to fill up the utilisation of the quotas. So this is seen as a positive move to solve the labour shortages. Our channel checks with our construction sector suggest the labour shortage bottlenecks has subsided. The third point, material price remain persistently above pre-pandemic levels. Key construction materials remain elevated. For example, a key construction material, which is the 60mm rebar, the March price was at 3,075 per metric ton, compared to a 2,075 metric ton back in February 2020. While average bulk cement price also remained high at 390 ringgit per metric ton, compared to 193 back in March 2019. Nevertheless, despite the higher material costs over the past 3 years, we actually seen the bond issuers, the property companies that is covered in this report, were able to pass through the cost increases and maintain their gross margins. Finally, we move to the last part where we touch on the property sector bonds. We think property sector bonds will remain stable as property sales are expected to continue to improve. The issuers that we are highlighting in our report are EcoWorld Development Group Berhad, RI Property Group, Marsing Group, Sime Darby Properties, SP Setia, Tropicana Corporation, UEM Sunrise Berhad. These are companies who generate at least 80% of revenue from property development. We also include some property-related issuers as well. So in terms of credit, the past 3 years, we saw some issuers reduce debt and pare down their inventories, which is an encouraging sign. The high number of new launches, as mentioned previously, means higher expected sales. But on the downside, this also could mean issuers would increase leverage for land acquisition and development, which will potentially weaken credit metrics. As mentioned earlier, despite the increase in construction materials, the companies under this coverage were able to maintain their gross margins so far throughout the past 4 years. Gross margins are revenue less the cost of making the product. We see this as an indicator of strong pricing power from strong branding and prudent cost management. Nevertheless, we could still see margin tighten given that the hike in material prices will pass through from this year onwards. So, among the bonds that we are listed here, we think few issuers stand out for their attractive yields, which we are listed here are UEM, Marsing and Sunway. So that's all for today's podcast. Thank you for listening and take care.